everybody, welcome back to the Chapple Show, and today we're going to be talking about the economy and more specifically some bad stuff that I was able to find after doing a little bit of digging. So this all kind of started, I was reading an article about how a lot of the billionaire investors in the world, they have more cash on hand than they've ever had. Now there's lots of reasons for this, but the main one would be because they don't really find that there's a lot of opportunity to make a large sum of money in the next year. And a lot of them actually expect there to be some sort of correction or drawback. I was looking at a bunch of interviews with like Warren Buffett, Charlie Munger, people like that, like big time billionaire investors. And they're all saying the same thing, like, look, we don't know whether a recession is going to hit in the next year or two, but all signs would kind of point to it should be happening in the next year or two. And as most of you may know, I've been kind of saying that there should be some sort of correction or recession in the next year or so. And there's lots of data to support that theory. The thing that I've mentioned is like every 8 to 10 years, there's some sort of correction or some sort of recession, and that's been the case for the last 300 years, so why would this be any different? Now, I was actually digging into a lot of specific numbers that the government releases in Canada and the United States in the past few years, and I found something that that's quite alarming. So hear me out for a second. In 2008, the recession was caused by the real estate bubble that caused the financial institutions to fail, which caused kind of everything to fail at the same time. 2000, it was the dot-com craze, the dot-com bubble burst, lots of speculation in the stock market. In the 1980s to early 90s, it was the savings and loan crisis and the credit crunch and all that kind of stuff. And now, in this video, I'm going to be talking about stuff that I think is going to be the next cause of the recession. I did a lot of digging, and here's what I found. So this next one is not going to be based on real estate like the last one. The real estate market's actually been a little bit crazy, but it's been okay in Canada and the United States. There's been a lot of like foreign buying and that kind of stuff, but that's not going to be the cause of this recession. Now, what I think is going to happen, I'm going to give you some facts here, is it's going to be based around a few things. So the number one thing I want to talk about, which is the biggest problem that I saw, is actually consumer debt. I was very surprised at this number, but at the same time, I wasn't. So consumer debt is at an all-time high. And so what do I mean by that? Well, consumer debt is stuff like credit cards, auto loans, stuff like that, like debt that you would use for everyday things. This isn't your mortgage. Student loans are not necessarily in there. I'm going to talk about that a little bit more in this video, but just let me give some numbers for you here. So the very first thing I'm going to mention is the average person in Canada and the United States has $2 of debt for every dollar of income. Isn't that scary? Now that doesn't sound too bad, but when you think about it, the average household income is about $50,000, meaning that the average household also has over $100,000 in debt, which is a lot. And again, I know it doesn't seem like much, but this is at an all-time high. This ratio is good at like $1 of debt for every dollar of income, but when it's twice as much as your income, there's a little bit of a problem here. Now this kind of leads to the next point here, is that half of all Americans and Canadians are within $200 of broke, meaning that half of all Americans or Canadians are within $200 of not being able to pay their debt or their bills, meaning that they are literally living paycheck to paycheck, which is the number here was that it's 75% of people are living paycheck to paycheck, and half of people are within $200 of being broke. So I guess the 75% number comes from people that have or are within $1,000 of not being able to pay their bills, to pay their rent, all that kind of stuff. Now, I was actually digging into a lot of the information that the government of Canada and the government of the United States releases every quarter, and I went back about 5 years or so, and I noticed a little bit of an alarming trend, which was that every single year credit card usage has gone up 2 to 5%. And then it's kind of peaked in 2016, where last year credit card usage went up 10%. And actually, what's kind of funny, I'm going to give a little bit of a side tangent here, was so the Canadian economy, this isn't the American one, this is the Canadian economy. The Canadian economy was projected to grow about 0.7% last year, or 0.9% or 1 point. It was not, I don't know what the projection was. I know what the actual number is, but it was projected to be somewhere like around 1%ish, and it ended up being like 2.3 or 2.2%, which was, that's okay, or 2.6 or 2, I forget what the exact number was, but it was like a good number, 2 to 3%, that's okay. But then I dug into the numbers, and it was a little bit frightening where that number kind of came from. And a large reason why the economy was growing wasn't because of business investment. By the way, business investment is at an all-time low in the United States and Canada, which is kind of weird because the PE ratios of the stock market, which are business investments, they're at an all-time high, meaning that people are really into buying stocks right now, which is a bad, I'm going to get to that in a second. Back to the Canadian economy. So a large reason why the numbers were kind of inflated was that consumers specifically were using debt at an all-time high to buy like appliances, to buy shoes, to buy anything, all the consumer stuff. They weren't investing. They're over leveraging themselves. So why is this bad for the economy? Well, people, as I just said, they're over leveraging themselves, meaning that if the economy takes one hit, this entire system could just kind of be in flux for 5 years, because people aren't going to be able to pay off their debts, and that's going to cause a lot of companies to fail. And obviously when companies fail, it just kind of trickles down into everything. When companies fail, they got to lay off employees. All of a sudden those employees can't buy enough stuff, so the stores that they used to buy stuff at, they go down, and then everything just kind of folds in on itself, and the stock market goes down too. Actually, the funny thing is that the stock market isn't usually the cause of a recession. It's kind of a symptom of an underlying problem most of the time. Now, another thing I want to mention, which is a little bit frightening too, is auto loans and the 30%. So auto loans have gone up by 30% in the last, what's the number here? In the past 5 years. Auto loans are kind of becoming the new, mortgage of 2006, 2007, where they're just being handed out to anyone, and you don't really need a down payment a lot of the times, and you just get completely an interest rate of 22% sometimes, and it's just absolutely ridiculous. So auto loans, they're building up too, and especially student loans too. Student loans you can't go bankrupt on, which is scary too. So I would throw that in here too. I mean, seriously, I do think that the next recession, it's going to be based around debt of consumers. It's not a mortgage crisis though. It's consumer. It's stuff that people are using debt for, which you don't really need to use debt for. Like I tell the story about how one of my friends, last year they invited me to go on a trip, and I was supposed to go. And I said no because I didn't really want to spend, I think it was $3,000 to $6,000. I thought I'd rather just work on my business, and it ended up being a good decision for me. Now they went on the trip, and I heard that one of my friends financed it on his credit cards. And originally I thought it was a loan, but it was actually he used his credit cards to finance his trip because he didn't have enough money in the bank to go on vacation. So, not saying that's happening a lot, but think about that. Like 30 years ago, would people use credit cards or a loan to go on vacation? Probably not. So that's something that I actually read an article on that too. It was in the Globe and Mail, a Canadian newspaper, and they were saying it was that exact same thing. Like people are using loans and debt and credit cards to go on vacation now more than any time in history. It's absolutely ridiculous. Like if you don't have money to go on vacation, you shouldn't go on vacation, everyone. That's not how that works. So we're going to get back to this. Now, will this recession, will this correction, will this, whatever you want to call it, affect everyone equally? And that answer is actually no. One thing that I was able to find was that a lot of wealthy people, a lot of rich people making lots of money, they are spending less and taking out less debt now than they ever have in their lives. And poor people and middle class people are doing the exact opposite. They're the ones using credit to pay for all their living expenses, all that kind of stuff. Rich people are saving up their money, I guess because they see something. They're like Warren Buffett and Charlie Munger. They see something happening. They don't really know what it is, but something's happening. And there's going to be, after this recession and after this correction, there's going to be a giant opportunity for everyone out there that was able to stockpile free cash to invest. And like as I said before, business investment is at an all-time low right now, which is really strange to think about considering the economy is growing a little bit. It's just, this is absolutely crazy. So what do you guys think about this? Do you think that I am a little bit crazy, or do you think that this is like something to worry about, how consumer debt is kind of overwhelming everyone at the current moment? I mean, I was looking at the numbers from decades ago, and the average person had nowhere near as much debt as they do right now. So one more thing I want to touch on is like how, I've already talked about this, but like how can you take advantage of if there is a recession that's coming soon? And Warren Buffett actually has a quote here. And so he says, he agrees with my 10-year recession rule. He said, and by the way, Warren Buffett's been investing for about 60 to 70 years now. He knows what he's talking about. And if he expects something bad to happen, you should probably listen. So he says, every decade or so, dark clouds will fill the economic skies and they will briefly rain gold. When downpours of that sort occur, it's imperative that we rush outdoors carrying wash tubs, not teaspoons, and that we will do. So by that he means in the next couple of years, when everything starts to tank, when all the value of everything starts to go down, make sure that you buy as many business investments as possible, especially in the stock market. So that's what he's doing. He's stockpiling more cash now than he ever has in his entire investing career, because he thinks something bad is coming. That's what he thinks. So make sure that, I'm not saying don't invest in stocks right now, okay? I just want to make that very clear, because I was talking about not investing in the stock market, last year, and if you were to invest last year, most people would have made 10% on their money. So I'm just trying to say, watch out, and maybe instead of investing, $500 a month in stocks, or maybe instead of investing $1,000 in stocks, maybe you just do like 800 or 700 or 600, and then keep a few hundred to yourself so that you can invest maybe next year or in 2 years, so that you can have enough money to take advantage of a potential economic downfall. But there might not be one, guys. Like this is just all theory of what I've seen. Now, I don't like this. This is why I'm talking about this. I don't like how much debt the average person has. That's why I'm talking about this. I am a fan of only having like good debt, like for investment properties, or using debt to maybe leverage stocks every now and then, or maybe occasionally taking out a loan to start a business, but I don't like doing that. So again, this is all theory. What do you guys think? Do you think that I'm right on this? Are you guys worried, or are you just completely okay and you think nothing bad's gonna happen? So I was watching the movie Boom Bust Boom, and it's a great movie. It's on Netflix. It talks about economic cycles and going back to, I think, the 1500s and tulips, and about how everyone said tulips were the best investment, and so everyone bought tulips. And then when they went to try and sell those tulips, no one wanted to buy them, so everyone who bought tulips went poor. And it goes like that for hundreds and hundreds of years. And I think that we're at that point now where everyone is having faith in the stock market. So if you were to go on to Google Trends, you can actually type in keywords to see how much something is being searched and how much it's grown over time, the search. And so if you type in, stock market investing, how to invest in the stock market, all that kind of stuff, you'll see that it's at an all-time high right now. People want to know how to invest right now, meaning that that's probably pretty bad. That means that we're probably at the end of an economic cycle right now. So again, I think that's going to wrap this video up, and just know that, go ahead, invest in stocks. I could be wrong on this. A lot of investors could be wrong. All the people, Warren Buffett and Charlie Munger, they could all be wrong. I'm just saying, watch out. And I know that in the past month or so, the Dow Jones and the S&P are down a few hundred points. I would kind of ignore that right now, because normally if there's something really bad going to happen, it's generally happens really fast over the course of a few weeks. But yeah, just watch out. So anyways, I think I'd like to thank you very much for watching. Leave a comment on what you think about this, consumer debt, all that stuff. And yeah, you're all very beautiful people. I'll see you guys in the next video.